I didn't hear any bell.
What gives some of these people a right to say what something, in their opinion and not a fact, is worth?
With a public company, the stock is a reflection of the potential value of the company.
Now GameStop is on everybody's mind.
In the last 3 weeks, GameStop has been handed on a silver platter.
All right, welcome back to the show. We're here with Bruce Frommert, and he has his own YouTube channel. He's been on the scene with GME and AMC, for that matter. And tell us more about your channel.
Well, Stock Markets with Bruce is the channel that I cover the stock markets with, and I launched the channel last summer as a second channel to my YouTube empire. My first channel, Traveling with Bruce, like talking about cruise ships. But my second channel, Stock Markets with Bruce, I wanted to cover the markets. And what I wanted to do is basically talk to people out there about how the stock markets work in plain English. And so I was looking for a number of topics to cover, and one of the topics that caught my eye was the story about GameStop and how many shares have been shorted on the company, and that just stood out like you couldn't believe it. 140% of all the free trading shares out there, they were shorted. It was ridiculous. 70 million shares exist. 50 million shares are allowed to free trade, and there is a 70 million share short position. And that is way out of normal for any public company. Any company with more than 20% of a short interest is a heavily shorted stock. 40% is massive. 140%, there's no one else close. So I started making videos about GameStop, the corporation, the company, what they've done, their history, and talking about this short position that someday this could come back to bite people if they're short the stock. And at the time I did these videos back in the summer and the fall, the shares were about $4.50, $4.80 a share, $5 a share, and they had just been performing terribly for a couple of years. And so I saw an opportunity. I thought I would explain it in plain English to my viewers to kind of let them in on, what's going on.
Do you think your viewers are learning at an astronomical rate with this event? Because I feel like I have.
Yeah, no question about it. At the first few months that I was covering the story, nothing was happening with the stock. It was just sitting between $5 and $6, $4, $5. But then I began to notice filing reports with the SEC. I follow the SEC filings that all public companies have to do. And I began to notice that the company was filing or on behalf of investors that were buying up blocks of stock. And as soon as you break the 5% ownership level, you have to disclose your ownership to the SEC. And I had noticed that earlier in the year that there were a couple of activist investors that bought up some stock. They had about 7% of the company, but not much happened yet. Then they joined the board of directors. Not much happened with the shares. And then in November and December, I began to notice Mr. Cohen picking up stock, and I figured out who this guy is. Ryan Cohen, he was the creator of a company called Chewy, and Chewy is a online pet supply seller. So anything for pets that you want to buy at a retail level, you go to Chewy and buy on the online level. He sold his company after a few years for $3.5 billion, cashed in beautifully, and turned around and started buying up stock in GameStop. And 76 million bucks later, he finished buying at about $16.80 a share, and he had 13% of the company in his hand. And he then became a director of the company with two of his Chewy former employees. And so the three of them are now on the board of directors of GameStop, and they have merged together their talents. So the GameStop people have picked up Mr. Cohen, and now they're going to become an e-commerce seller of gaming systems, games, and you name it. And I think this company has a phenomenal potential going forward.
I had this conversation with somebody recently. I always felt like what something is worth is what somebody's willing to pay for it.
Sure.
What gives some of these people a right to say what something, in their opinion and not a fact, is worth?
Well, you have to understand that a company that's a privately traded company, it's only worth what the seller, the owner could ever get for it if they try to sell the family business. You know, a
Mhm.
mom and pop, a t-shirt shop in New York City is only worth the cash flow and the net earnings times maybe a year or two of profit. That's all you're going to get for the business. Or your assets. You'll sell your assets off and that's all you're going to get. With a
Right.
public company, the stock is a reflection of the potential value of the company. For
Mhm.
example, Apple is trading at 136 bucks a share, and it's worth 2.6 trillion dollars. If you multiply all the shares outstanding by what they're trading for, the company is valued at 2.6 trillion. But if you take all the assets that Apple has, which they're 170 billion in cash, all their inventory,
Mhm.
all their
Mhm.
office furniture and everything else, you add it all up, it isn't worth 2.6 trillion dollars. Apple
Right.
is probably worth 400 billion, 350 billion dollars in actual physical assets, but the shares, the price that they're trading at is telling you 2.6 trillion, and it's all about enterprise value, cash flow, licensing rights. The fact that Apple doesn't make an iPhone in a factory that they own, they have their iPhones made in a factory in China that they don't own. They just license it to have it made. So a stock trading on the open market is a reflection of the value of the company. And the same thing with GameStop. When GameStop was $5 a share last summer and before, people don't know and haven't heard this news, but the company GameStop was not happy with the shares where they were at $5-6 a share. They were buying back their own shares off of the stock market with company money on a share buyback.
Mm.
They bought back 34 million of their own shares at an average of $5.16 a share. That's 175 million of company money to buy back their own stock, while at the same time, 70 million shares had been shorted at prices of about 30, 35 bucks a share 2 years earlier, all the way down to that $5 level. Now, all of a sudden, what ended up happening was instead of having 105 million shares out in the street, there were only 70 million shares out in the street because 35 million were bought by the company and those shares were canceled. And the shorters now were short every share that existed. And in reality, 140 million shares were trading hands or could have traded hands on the open market. 20 million held by insiders of the company, 50 million held by the public, and 70 million created by short sellers. And this is what caused a short squeeze once Mr. Cohen picked up his 9 million shares on the open market that he was just paying cash for. I would bet you he bought a bunch of those shares from
Mm.
shorters that were selling it to him, hoping to buy it back
Mm.
at a lower price later. And they got caught when the shares went from 18.50 one day, about 3 weeks ago, to 38 bucks in one day. A week
Right.
later, they were about 50, 60 bucks. And then they ran up to about that $400 level, which was ridiculous, but it
Oh, yeah.
happened. And now we're back into this 48.50 range on the open market. It's a fascinating story, but it's its own story. GameStop hasn't done anything different in the last 3 weeks. They still sell game systems at all 5,000 of their stores. They're building out their e-commerce division. They're hiring people away from Amazon and Chewy to join GameStop to convert the company to a digital company. This will take months to complete, but it will happen, and they will lower the number of stores that they have outstanding. Wouldn't surprise me if they're down to 1,000 stores in a couple of years, and they'll only be their most profitable centers.
Just a few days ago, people were still talking about the short squeeze is about to occur. In
Yeah.
your estimation, has it already happened?
Yeah, I think so. I think we had a situation where, with great fanfare, there was a short seller, Mr. Andrew Left, who has a fund. I believe they were short a couple of million shares. I have a suspicion that they were short somewhere between 10 and 20 bucks a share, and the shares were now trading in this $35, $40 range. And he quite famously went on to Twitter to tell the investment world why he thought the shares should go back to 20 bucks a share. He had 5 different reasons, mainly because he thinks it's a brick and mortar company and will always be one. The market, listen to this, gentlemen, for his answers, and they were not impressed. And the shares went from $40 to $80 the next day because they weren't buying this notion that the company would be a brick and mortar company forever, and that Ryan Cohen was to be dismissed. So he had to buy back stock between about 60 and 80 bucks a share to get out of his position. He lost a ton of money. And then within 24 hours of that, we found out that Melvin Capital, which is a hedge fund handling about $12 billion in assets at one point, we find out through the grapevine, those guys are short even more stock. And we find out that they bought back their stock between 140 and 160 bucks a share, losing billions. And they turned around Melvin Capital and they immediately found 2.3 or 2.75 billion of fresh cash to bring into their hedge fund to pay off their margin debt. Although they called it attracting investors, but reality was they attracted 2.75 billion to bail themselves out of the loss. And so those shares were in a full-blown short squeeze from 40 to 60 to 80 to 160 odd dollars. And it just kept going with this momentum trading. But while all that was going on, there were a lot of hedge funds out there who were not short the stock. And they knew that other hedge funds were short the stock, and they piled into the stock to run it even higher, to put gasoline on the fire, along with all the retail investors that were jumping in. And that made that stock run up to the $400-500 range. Unfortunately, when the shares reached that level, then we found out the next level of problems, and that was with certain stockbrokers who were all of a sudden finding themselves undercapitalized and overexposed on the shares of GameStop and AMC and Bed Bath & Beyond, a whole bunch of companies who have high short positions, but not as huge as GameStop, all ran up at the same time. And now all of a sudden, retail investors were restricted from being able to buy any shares at between roughly $200 and $400 a share. As the shares were coming down, they weren't allowed to buy. They were only allowed to sell. And I don't know about you, but if you're in a market, and I don't care what it is you're trading, people are not allowed to buy and they're only allowed to sell, prices kind of go down. And that's what happened here. The shares came back and they went all the way down to the $100 range. And all kinds of analysts on Wall Street were saying these retail investors, they're stupid. They shouldn't have done this. Why are they doing it? But the reality is they're not allowed to buy up stock. And the stock just started free falling the opposite direction. And here we are right now at 48 a share. The fallout is still following through, and the shares are trying to find a new bottom here to reassess. But if you look at the chart of the shares from 3 months ago to now, and you take that 2-week crazy window out of there, that chart is doing this. It's just going up. Even at 48 a share, the shares are trading at a much higher rate than they were 3 months ago. So it'll be interesting to see how the complete transformation of GameStop away from 5,000 tiny little stores into giant warehouse distribution centers with a really strong internet presence that Mr. Cohen, I think, will create, like the Chewy internet presence they have. I think this is going to be most interesting.
Man, we're really starting to see where the corruption lies.
Brokers out there like Robinhood and Fidelity and others were restricting clients from buying stock. The Robinhood people, just so you know, they practice this theory of saying to the world, if you're a small investor, you're welcome to come here. You can trade commission free, and you have the freedom to grow your wealth. Except when it comes to buying stock that's going to $400 a share, you can't get into that. That company was $4 billion undercapitalized in less than 4 business days. And they only had $500 million of capital available to them through their existing banking lines. Robinhood had to go to investors to raise the other $3.5 billion to keep the brokerage firm from going out of business in 4 days. That's how big the market just overtook, how much the market overtook these brokerage firms. The large giant firms, the Goldman Sachs and the Morgan Stanleys, they got hundreds of billions of assets behind them to cover it. But these online platform brokerage firms that are attracting all these smaller investors, they were undercapitalized to handle the business. And that's a direct reflection of how many millions of people wanted to open up brokerage accounts in the last year since the COVID deal kept us at home. And a global movement of investors want to get into the stock market with $500, $1,000, $1,500 to take a shot at the Apple shares or Amazon shares, or in this case, GameStop shares. And the brokers were unequipped ill-equipped to handle the business, which is shocking to me because the SEC should be all over these guys for disclosure requirements, capitalization requirements. This should be a top priority, but somebody dropped the ball somewhere.
Well, the SEC seems awful quiet lately too.
Yeah. Yeah, and keep in mind that the brokerage industry is a self-regulating business. They do their own rules, they do their own enforcement, and they decide what's what. Just so you know, if you have a mutual fund or a pension fund or a hedge fund, and you own stock in Apple or Amazon or any company, you have to disclose to the SEC, to the markets, your position in all of these companies because you're representing investors' money inside your fund. But if you short stock, you don't have to tell anybody that you're short anything. That's a secret. Now, I'm wondering as a small investor, if I don't invest, by the way, I'm just a commentator and follow the markets. But if you've got a small investor who wants to buy 100 shares of GameStop at $40 a share, $45 a share, they don't know if they're buying it from a person who's selling them the stock that they once had, or if they're buying it from a shorter. And that's what the street doesn't know. Right now, as I'm talking to you, no one knows the exact number of shares that are shorted at this particular moment and who the shorters actually are. Whereas if you want to know who owns all the shares of Apple stock from every mutual fund in the world, that's publicly available. That must be disclosed. But short sales do not need to be disclosed. The SEC and the brokerage community can decide when that becomes knowledge. Haven't done it yet, and I wonder why.
That's just dark money right there.
Yeah, that's a dark pool. This is why firms like Melvin Capital and others who got caught with billions of dollars of a short position they had no idea was going to come at them. They had no clue that GameStop would go 510 to 150 to 400. They were caught with their pants down. And luckily for these giant funds, they can raise more money. They've got friends to raise more cash. But even the brokerage community got caught in this whole phase. And to me, I cannot understand why it is not a matter of policy and mandatory for all institutions to have to declare short positions like they declare long positions. It's like they allow markets to go up, but only for the funds, not for the average investor. It kind of makes you wonder.
Well, I don't know. Does it may have something to do with the fact that all these other big shots have more money, so therefore they seem to have more clout?
Well, you know, the thing I find is if you turn on the TV set and watch any of these financial, networks and the talking heads out there who, keep us posted on what the markets are doing, they love it when they can get a serious, big-sized hedge fund manager to appear on the air with them. They kowtow to these guys because they're multi-billionaires. Good for the ratings, basically. The advertising that is put together by these networks, they're trying to get eyeballs to watch their network, and the best thing that gets eyeballs watching is markets that go up, and to be able to listen to successful multi-billionaire people, because they must have a secret formula that the rest of us don't have. My opinion, if you
everybody's on their side, that's what it is.
Well, if you control the game, if you control the rules, and you control the disclosure requirements, you disclose the margin requirements, you disclose who can buy and sell stock. Hey, guess who's going to win? The little guy hasn't got a chance against these guys. And if you're a U.S. senator or a U.S. congressman, I can guarantee you that these people on a constant basis are visited by lobbyists for the investment industry all the time, who are extremely well paid and are making sure that the politicians get the one side of the story that the big boys want you to get. There's no advocate for retail investors. And when it comes to super PAC promotion of a politician, they're not done by the average retail investor. They're done by major entities in whatever industry are trying, trying to get their message promoted. And the investment business is a major business.
So when it comes to GameStop, where do you see this going in the next 5 years?
For the company itself?
Yeah, sure.
I I like the direction that they want to go. They're on top of the situation. They know that running a corporation with at one point 5,600 retail stores and 5,600 separate leases that they had to renew every 5 or so years, they had to have an army of lawyers in all the countries that they had stores located in with all these shopping mall operators. They had to pay local business taxes at every one of these locations, employees with local employment laws, endless insurance issues, fire codes. I mean, to run 5,600 separate locations globally is a nightmare proportion. I love the idea that they're going to basically sell off the retail stores and overseas markets to other operators. They're going to just become a massive distribution company with simply the e-commerce side of things. I think they're going to make a lot of money with their websites. I already know, I've heard already that their website that they're running now for their 55 million members of their club, they're selling space on their website to their suppliers for premium positioning. It's kind of like a website that is a moneymaker for these guys. They're not only selling merchandise off the website, they're selling the real estate on the website. So if Nintendo wants to brag about a new product line, or Sony or anyone else, they're selling real estate on their website. I think they're actually going to make money on the website without selling a single item. And then the items on top of that, instead of selling items now through retail stores to people who walk in the front door, they're going to be able to sell merchandise globally to the entire planet through their websites and their specific located warehouses. It's going to become the Amazon of the gaming area. And Amazon, of course, is price oriented. They're trying to tell you, if you come to Amazon, you get the best deal. When you go to GameStop a year from now to their website, you're going to be entering, as a gamer, you're going to be entering a site that is friendly to you and is completely gamer oriented. Whereas with Amazon, it's a place to buy something for $19.97 and have it shipped on Prime. With GameStop, they're going to do with GameStop what Mr. Cohen did with Chewy. Pet owners go to Chewy.com and they don't go to Amazon. Once they buy on Chewy, you can't shake them loose because it's a pet-friendly environment that you cannot get them out of. These other online retailers cannot compete. I think the same thing's going to happen here with GameStop. As time goes on, you'll see tournament play, the latest game previews, all kinds of points will be earned with loyalty. I think these guys are going to really make a dent on the e-commerce side for the gaming market, and it'll be global, not regional, and that's the difference.
I absolutely agree with you, and I think a lot of it also has to do with what happened here. Now GameStop is on everybody's mind. The public wants to know if they're going to do well.
That's right. I can tell you that in the last 3 weeks, GameStop has been handed on a silver platter at least $1 billion of free advertising for brand awareness, because there were millions of people who had no idea who GameStop was 3 weeks ago that now know who these guys are and kind of what they do. This is brand recognition that they could never have afforded to purchase themselves. They could never have bought it. Their involvement with Sony and Microsoft with the Xbox, that Xbox relationship with Microsoft, I think, is much deeper than we know. And I've been wondering myself, will this go deeper? Will the day come where Microsoft and GameStop will want to have an even closer relationship going down the line? It'll be interesting to watch.